on to our first discussion and on to the Money Show. We make sure that we just don't talk about investing in mutual funds, but also help you meet the brain behind these funds. In this week's Meet Your Fund Manager segment, we have on board Sailesh Raj Bhan, who is the CIO-Equity Investments at Nippon India Mutual Fund. And today we will be discussing Nippon India Innovation Fund. Hi, very good evening, Sailesh, and thank you so much for your time to ET Now. Firstly, tell us more about this Innovation Fund. We believe that this is an NFO. So tell us more details about the same. How big is it and what kind of a response you're expecting from the same?
See, the focus of this innovation strategy, the fund which we have creating, is primarily the fact that there will be a different segment of businesses which will win market share over the next 10-15 years versus what has been the last few years. Last few years you've had a lot of businesses which are traditional, have done well, but there are a lot of businesses which the winners for the next, say, 10-15 years will be very different. These businesses and companies will have material investments in research and development, or may have a business model design which is very different from what traditional players look like, and hence they will have possibly a better right to win. We have seen these kind of businesses do well over the last 10, 15, 20 years in the US, which is generally ahead of most countries in the world in terms of innovation, and I think that space is starting to happen and beginning to become important in India, especially where a large amount of private capital has gone in the last 10-15 years. What is important in this particular space is this capital in the private equity side which has gone into would look for public market participation, and hence a large number of companies in this space will also list. We also have a good number of multinational businesses with strong global capabilities and their own R&D being world class, with their Indian subsidiaries having access to that. That also provides an additional area where the fund will find companies which can be a part of this portfolio. So our approach to innovation is very simple. The work, either the business model, either the R&D investment, or basically something which is disrupting the existing space and creating new markets. So these three categories will account for a large part, nearly 80% plus of the investment in the fund. And we think what's happened in the last 10-15 years in the US, to some degree in at different level, could happen in India as well, where you would find these innovative companies gaining market share, having better profit margins than what traditional companies would have, and possibly having growth rates which are ahead of what the average index growth rates can be. So this is the universe we are targeting to create and construct a portfolio with a medium to longer term view. We are looking at investment horizons in excess of 5 years when investors are coming into this kind of a strategy at the minimum, because given that this will not be like a traditional diversified equity fund, this is more a thematic fund, it does require a horizon of 5 years, 7 years plus to really capture the whole theme and the opportunity. And I think we are seeding the product today so that as and when this market also grows and new businesses like software as a service companies and many EV businesses, all these lists and also become a part of the portfolio over a period of time. So I think it is playing into the larger theme where innovating companies we have seen generally have margins and profitability and growth better than what average traditional companies can be. And our belief is the winners of the last 5, 10, 15 years may not necessarily be the largest market value creators in the next 10-20 years. So I think this is the differentiation we're trying to bring in terms of launching this innovation fund.
Since the NFO has been open since 9th of August and it's still some time, that 23rd of August is the end date. So if I may ask, what kind of a response you're getting from the markets until now?
So our conversations with the various partners is reflecting, and we are communicating the differentiation in terms of the product we are bringing to the market, and we are positioning this as a thematic product itself. So I think that's the communication which has been happening, and it's more a medium-term opportunity which we intend to capture by launching the product now. And this product generally will have a portfolio construct which will have 80% plus innovation companies, companies with differentiated business models versus a traditional equity diversified fund which may have a large exposure to index companies, and generally you've seen traditional companies having much larger market caps. So our idea is to communicate this, and that's what we have been doing, and we are finding seeing the differentiation of the product and communicating that has been important, and that's what I think the investors are looking forward to.
Shailesh, you are telling that this is going to be 80% in terms of the companies that are investing in some innovative sort of a thing. So exactly, if you can just highlight a couple of sectors that are that will be the key focus. There is definitely a difference between the emerging sectors as well as the traditional ones. But in context, if you can put it, are there any new age tech companies that are a part of that? From R&D space, are there any pharma companies that could be a part of it? Any sector that is in focus currently?
Yeah, so when we evaluate the universe where innovation is really happening, I think there are 2-3 important or 4 important categories where these things are working around. You have highlighted companies in pharmaceuticals investing in innovative R&D and selling patented products in the US. There are a few select businesses which are attempting to do sizable investments close to $500 million a year on R&D and trying to create opportunities internationally. So those companies are one area of investment. Second is a lot of multinational companies who have capabilities which are driven by their global R&D, and those businesses have a significantly long runway in India because their kind of businesses, the large projects and all which require these type of capabilities of the multinational companies, are just starting to happen in India. So you've got a good set of multinational companies across engineering, manufacturing, companies in innovative companies who serve across industries, even in healthcare, even in some other areas where they have differentiated products, which in India that kind of work is not happening specifically. So these are companies having those capabilities which will be at the table. The third area is the new age companies which you have talked about. A few companies are now emerging from the in the listed space where there is a right to win with dominant market shares, and because of what's happened in private markets, you're seeing valuations here getting a little bit more sensible and rational when they would look for coming out to public markets and list. And I think there are a lot of companies who need capital and would certainly want to access public market, given that there is clearly a funding winter, as they call it, in the private equity space or the unlisted space. So I think these set of businesses who have created business models which have at least significant market shares already and have a path to profitability are the kind of businesses we are looking to participate in. So these segments will account for pharmaceuticals, engineering and manufacturing, energy transition space where people are investing significantly in new energy, in solar, wind, and several other areas, the transmission distribution value chain, because that will have a lot of innovation has to happen there to be able to handle storage side, electric vehicle side. So a lot of these areas will be an important part of the portfolio construct. So it will be across these segments.
While I was reading your Innovation Fund presentation, I could spot that you have highlighted the big shift in some of those traditional sectors where I find banking, auto, as well as media. You have highlighted that how the shift in terms of innovation has happened in at least these sectors. So just wanted to understand that the companies which are making a shift internally, who are basically from the traditional business and then making a shift, be it EVs when it comes to the autos, and they are focusing more on that, will these companies be a part as well? And along with that, what kind of a return expectation will a customer be having from this fund? Why I say so, I just wanted to understand what's the understanding in terms of why the market will give premium to these companies, and what's the fund thinking on those lines?
Yeah. So interestingly, existing companies also doing significant innovation. They cannot just be an efficient player, but they have to do significant innovation, a business model change, or their share of revenues from new age or share of revenues from new technologies rising sharply or at least will transition meaningfully in the next few years, could be a part of the opportunity in the portfolio. So it could well be businesses. In simple terms, any innovation has to lead to much higher profitability or much higher growth than the competition in the same sector. Those will be the deciding factor in terms of how the construct of the portfolio will be. To your question on what is the opportunity here and why this segment should be there. See, we have seen generally when the segments are small and when they are emerging, that is where the biggest value creation starts to happen, because then with these companies possibly growing at maybe 50% higher than the growth rate of indices in some cases, the kind of value creation they can do it over the next few years could be fairly significant. Obviously, they come with risk of being emerging technologies. They come with this thing. So for that reason, you have a balanced share of multinational companies with strong capabilities, Indian companies with strong R&D capabilities, and new age companies as a combination in the portfolio. Also, if you look back, a lot of businesses today which are larger part of NASDAQ, right, have actually been very young businesses 15-20 years back. India has been in that journey a little behind because it needs a lot of capital and a lot of innovation has happened in US. But I think the relevance of that innovation in India is starting to be high. And a few international businesses will certainly have larger market shares in India, which may not be able to participate directly. But I think the opportunity for a lot of Indian businesses also to come out and gain market shares in these areas remains. So I think the scope is fairly large. And generally, I think the market will respect companies who are creating larger markets, who are have a business model where they can earn better profitability than traditional businesses over the medium term, and who are growing faster than the market. So given this construct, the opportunity and possibility for investing in this portfolio as a thematic investment with the medium term view, I think is an interesting opportunity.
More about reinvesting as well as what kind of payment options will be there in this particular fund.
See, this will be an open-ended fund, and after the NFO closes, this will be available during NFO and after the NFO also for subscription. And people can choose either a systematic investment plan based on their needs, or they can choose lump sum investing based on. So it's open for subscription post the NFO period as well.
Any take on the payout option as well as reinvestment options?
See, like any equity fund, there are options where there's a dividend payout option and the reinvestment option which is available. When you look at investing from a 5-year, 10-year kind of an horizon, because the thematic funds require that kind of an approach in investing, I think generally participating for longer term growth is actually what will really help investors over the medium term. So generally investors choosing a long term strategy prefer growth as an option, and that becomes a main option because you're willing to participate in incrementally growing your investment for a longer period of time, because these kind of businesses tend to have generally very high growth rates, and they require and incremental capital getting deployed at higher growth rates provides you one option. Investors who wish to have a dividend option or a payout option are also welcome in that particular strategy. But generally, given the nature of the strategy, given that it's thematic, given that it is longer term in nature, a growth option is a meaningfully a good option from investors to look forward to.
Shailesh, before we let you go, and this is the new fund that is there for all the investors, and you're positioning it as a thematic fund with the volatile nature of the market, and recently we have seen the markets flip-flopping in terms of that 20,000 mark on the Nifty 50 index. We are now down to 19,400. We are trying to defend that. So going ahead, what sort of a comparison or what sort of a return expectation you are expecting from this fund with respect to the benchmark indices? If you can just help us with your expectations, that will be great for the viewers then.
Yeah. See, logically, given the universe comprises companies which will be higher on quality, higher on growth, and even higher on longer term growth, I would say, I think these type of businesses should do reasonably well over a period of time. comparing it with the traditional benchmarks, I think over the longer term, these set of businesses should end up having greater profit share. And generally, when you have that kind of a thing, the possibility of delivering well in terms of returns also exist. But we must realize that these businesses take a meaningfully long period of time to mature and deliver as well. And I think hence horizon should be way longer to participate in. The idea of choosing this innovation strategy is to give investors a completely different portfolio from what generally investors would find in traditional equity diversified funds which have a large cap or a large and mid cap bias. And we think it will be a differentiated portfolio with, I would say, the construct will be very different from generally what a typical diversified funds would be. And I think the theme itself has attractive opportunities. If you look at it, some of the themes are coming from scratch today. They are very, very young today, and they will become meaningfully large. There will be multiples of sizes they are today. For example, the whole renewable energy theme, which is today fairly small, but it could be way, way bigger in the next 10 years, the way the environment is shaping up towards that. So likewise, even EVs, hardly maybe 1 million vehicles are sold in India today, which are electric vehicles, while globally it's becoming a wave. So that's one space which can be way different in the next 10 years. So we are choosing a high growth strategy here, and with a potential which can be way different from what traditional diversified equity funds deliver. And hence we are coming in a thematic category because it does carry the volatility and the risk which you refer to. So hence investors with a medium-term view, with having a 5-year, 10-year horizon in investing in these kind of spaces is what we are looking forward to. And it's very difficult to talk about returns in the future, but directionally I think the area is very interesting, is what makes us confident of the construct of the product.
And thank you so much, Shailesh. With this, we'll let you go on that. Thank you so much for joining us today on ET Now, and wishing you all the best for this new NFO.
Thank you so much. Thank you.
Okay, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back to take forward the discussion with another expert, so stay tuned for more.